In the whirlwind of daily life, it's easy to find ourselves sinking into the quicksand of debt. But fear not. With these 25 quick money fixes, you can throw yourself a financial lifeline and keep your head above water. Let's dive into practical strategies that can turn the tide on your finances. Fix 1. Track every dollar. Begin by meticulously documenting every purchase, bill payment, and financial transaction. This tracking should extend beyond the obvious expenses to include those small, seemingly inconsequential purchases that can stealthily accumulate. Utilize budgeting apps that categorize spending automatically, providing a clear visual of where your money is going. This practice not only unveils spending habits, but also highlights areas where adjustments can lead to significant savings. Fix 2. Create bare bonus budget. Constructing a budget that focuses solely on essentials forces a hard look at what expenses are truly necessary. This means prioritizing housing, utilities, groceries, and basic transportation while temporarily sidelining less critical expenses like entertainment, dining out, and non-essential shopping. The goal here is not just to survive, but to identify the minimum financial footprint you can leave each month, thus maximizing the amount available to pay down debt. Fix 3. Establish an emergency fund. The journey to establishing an emergency fund begins with setting aside a small, manageable amount from each paycheck, even if it's as little as $20. Over time, these contributions add up, creating a financial buffer that can prevent the need for debt in case of unexpected expenses. An emergency fund should ideally cover 3 to 6 months of living expenses, but starting with a modest goal like $500 makes the task less daunting and more achievable. Fix 4. Automate savings. Automation takes the decision-making process out of saving, ensuring that a portion of your income is directly funneled into a savings account before you have the chance to spend it. This can be particularly effective for building your emergency fund or saving for specific goals. Many banks offer options to automatically transfer a set amount from checking to savings accounts on a regular schedule, making it easier to commit to your savings goal. Fix 5. Negotiate lower interest rates. A proactive approach to debt involves contacting creditors to negotiate lower interest rates on credit cards and loans. Lower interest rates mean more of your payment goes towards the principal balance rather than interest, potentially saving you hundreds or even thousands over the life of your debt. Preparation is key. Before calling, be ready with details of your current rates, your payment history, and any competing offers you've received as leverage. Fix 6. Consolidate debt. Consolidating multiple high-interest debts into a single loan with a lower interest rate simplifies your payments and can reduce the amount you pay in interest, making it easier to focus your financial resources on reducing the overall debt. This strategy often involves transferring credit card balances to a single card with a lower rate or securing a personal loan to cover all outstanding balances. Fix 7. Use the debt snowball method. The debt snowball method focuses on paying off debts in order of smallest to largest, regardless of interest rate. This method provides psychological wins as each debt paid off builds momentum and motivation to tackle the next. While it may not always be the most cost-effective strategy in terms of interest paid, the psychological boost of seeing debts cleared one by one can be invaluable. Fix 8. Cut unnecessary subscriptions. In today's subscription-based economy, it's easy to lose track of monthly commitments. From streaming services to gym memberships, review your bank statements to identify all recurring charges. Then, critically assess which services you use and enjoy versus those you can live without. The cumulative savings from cutting unnecessary subscriptions can be redirected toward debt repayment. Fix 9. Sell unused items. The path to financial relief can also involve converting unused or unnecessary possessions into cash. This not only declutters your space, but also provides additional funds to apply towards your debts. Online marketplaces, local buy-sell groups, and consignment stores are all avenues to consider when looking to sell items. Fix 10. Avoid using credit cards. Limiting the use of credit cards is crucial to prevent accruing new debt. Transitioning to using cash or a debit card for daily expenses allows you to feel the impact of spending in real time, promoting more mindful financial decisions. For necessary credit card use, adopt a disciplined approach to pay off the balance in full each month to avoid interest charges. Fix 11. Opt for free entertainment. Exploring free or low-cost entertainment options can significantly reduce monthly expenditures. Local parks, community events, public libraries, and online resources offer abundant opportunities for enjoyment and enrichment without the price tag. This shift not only aids in debt reduction efforts, but can also lead to discovering new interests and hobbies. Fix 12. Cook at home more often. The simple act of preparing meals at home rather than opting for takeout or dining out can lead to substantial savings. Meal planning and batch cooking are efficient ways to reduce food waste and lower grocery bills with the added benefit of healthier eating. Experimenting with recipes and involving family members in meal preparation can turn this cost-saving measure into an enjoyable and rewarding activity. Fix 13. Implement a spending freeze. A temporary spending freeze where no non-essential purchases are made for a set period can reset spending habits and highlight areas of unnecessary expenditure. This practice not only conserves funds, but also fosters a deeper appreciation for the items and services you do spend money on, encouraging more deliberate and fulfilling spending choices in the future. Fix 14. Use cash envelopes for budgeting. The cash envelope system involves allocating a set amount of cash for different spending categories each month. Once the cash in an envelope is gone, spending in that category ceases until the next month. This tangible approach to budgeting helps prevent overspending and promotes a more intentional relationship with money. Fix 15. Take advantage of cashback and rewards. While reducing reliance on credit cards is advised, if you do use them, choose cards that offer cashback or rewards on purchases. This strategy can help offset costs on necessary expenditures, such as groceries and gas. However, it's crucial to manage this wisely by paying off balances in full each month to avoid interest charges that could negate any benefits. Fix 16. Refinance your mortgage or loans. Refinancing can be a powerful tool for reducing monthly payments on mortgages and loans, especially in a lower interest rate environment. By securing a lower rate, you can decrease the amount paid in interest over the life of the loan, freeing up additional funds for debt repayment or savings of funds for debt repayment or saving. However, it's important to consider the costs associated with refinancing and ensure it aligns with your long-term financial goals. Fix 17. Get a side hustle. In today's gig economy, opportunities for earning additional income are plentiful. Whether it's freelancing, part-time work, or monetizing a hobby, extra income can significantly accelerate debt repayment and increase financial security. When exploring side hustle options, consider your skills, interests, and schedule to find a suitable and sustainable source of additional income. Fix 18. Prioritize high-interest debt first. Focusing on paying down high-interest debt first, a strategy known as the debt avalanche method, can save you the most money in interest payments over time. This approach requires discipline and patience, as it may take longer to see individual debts disappear, but it's financially efficient, reducing the overall cost of your debt. Fix 19. Plan your meals. Meal planning is a proactive way to manage grocery spending, reduce waste, and avoid the temptation of eating out. By planning meals in advance, you can buy ingredients in bulk, take advantage of sales, and ensure you have a plan for each meal, reducing the likelihood of last-minute budget-busting food purchases. Fix 20. Use public transportation. If accessible, utilizing public transportation can offer significant savings over the costs associated with owning and maintaining a vehicle. This includes savings on fuel, parking, insurance, and maintenance. Additionally, the time spent commuting can be used productively for reading, working, or relaxing rather than focusing on driving. Fix 21. Do it yourself. Adopting a DIY mindset for home repairs, maintenance, and even personal care services can lead to substantial savings. With a wealth of instructional content available online, learning new skills to tackle tasks yourself can be both financially beneficial and personally rewarding. Fix 22. Seek financial counseling. Navigating out of debt can be overwhelming, and professional guidance can make a significant difference. Nonprofit credit counseling services can offer personalized advice, debt management plans, and negotiations with creditors on your behalf, providing a structured path to financial recovery. Fix 23. Challenge every expense. Regularly reviewing and questioning each expense encourages a mindset of intentional spending. This practice can uncover hidden opportunities for savings, reduce wasteful spending, and align your financial habits more closely with your values and goals. Fix 24. Stay insured. While cutting unnecessary expenses is crucial, maintaining adequate insurance coverage is essential for financial protection against unexpected events. Ensuring you have appropriate health, auto, and home insurance can prevent catastrophic financial losses that could derail your debt repayment efforts. Fix 25. Set financial goals. Establishing clear, specific, and achievable financial goals provides direction and motivation for your financial journey. Whether it's becoming debt-free, saving for a home, or building an emergency fund, having concrete targets to work towards can keep you focused and motivated, even when challenges arise. Embarking on a journey to financial health requires dedication, discipline, and a willingness to reassess and adjust your habits and strategies over time. By adopting these fixes, you equip yourself with a toolkit for navigating the complexities of personal finance, setting the stage for a future free from the burden of debt. Remember, every step you take, no matter how small, moves you closer to your goal of financial freedom.